Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 1st of September. Starting off with the FTSE 100, which is still consolidating either side of the blue 50-day moving average there, around 74.75. Nice RSI bounce off the neutral 50 level, so that suggests that we're ready for a new leg to the upside, but obviously wait for that end-of-day close through the 50-day line for confirmation if you need it. Above the 50-day line, looking for the top of that falling February trend channel around 76.60. Hopefully we can hit that over the next 2 to 4 weeks, or maybe a bit sooner. Ideally, we stay above 7400, which was that old support from the early part of July. Below that, then probably the worst case at the moment, 7330, which was the support for the market last week. Moving on to the DAX, and here the situation is that we're, I suppose, echoing what we're seeing at the FTSE in the sense that it is about the 50-day line, trading either side of that, 15,900. Want to see a weekly close above the 50-day line, and then that would hopefully give us a move towards 16,500 in the first half of September. Best case scenario at the moment, by the end of this month, up to 17,000 at the top of that rising trend channel from back in December. On the downside, not looking for anything lower than 15,500 on the floor of that channel. Moving on to the Dow, and the Dow was actually leading the other markets and breaking the 50-day moving average, but now it's decided they want to test it. That's around 34,700. We want to see the market stay above that, and also above the floor of that rising trend channel from October, around 34,100. As that would be, I suppose, the worst on the downside that we're hoping for, let's say. Above the 50-day line, though, looking for a retest of last month's peak through 35,700, and then best case scenario for the end of this month, 36,200 at the top of that rising trend channel from basically back in March. On to Bitcoin, which has been trying to revive itself, but so far not in a very confident way. Here we had basically a failure at the 200-day moving average, 27,500, and we're now back to the floor of this rising trend channel from January. The base there around 25,500, so don't really want to see that broken. If that is broken, then we're looking at 23,300 and the floor of that broadening triangle from back in March. RSI failed at 50, which is not good, and although we were very oversold before, it took a lot of effort to get us a rebound towards that 200-day line. I suppose the easiest thing now would be to wait for a proper end-of-day close through 27,500 and the 200-day moving average ahead of a potential move back to 30,000, but a disappointing end to August, just when it was looking as though it might bounce back. Moving on to the stocks. First one is ASOS, due to a lack of that many small cap opportunities, but here you can see we've got a rising trend channel from the end of May, top of that channel up at £5.30. We've had new support coming in at old resistance, which was around £4.40, so above 4.40, looking for up to £5.30, maybe as soon as the end of this month. 50-day line now rising as well, which is encouraging, and that just gives us the more confidence that 5.30 could be on its way, which was, I suppose, resistance on the way down. There is a gap to fill towards £5, so maybe that's the first destination that people can focus on. Next contender is Artemis, which has been a very good bulletin board hero over recent months. The start of the rally was an unfilled gap to the upside back in the middle of June, and the shares have not really looked back since, although I suppose we did peak out early in July. But unfilled gaps to the upside, we've got the third one in the recent past, which is quite amazing. You don't see that very often. And that suggests that 2.6 pence, which is the top of that rising trend channel from October, should be a done deal by the end of this month, and that we shouldn't see any price action back below 1.3 pence, which was resistance on the way down. But that triple unfilled gap to the upside, very strong stuff and very impressive, and obviously 4 total gaps to the upside since the shares turned around. So arguably one of the strongest situations around in the small cap area. On to BSF, which has been dithering in a range between, say, 10 and 14 pence since the beginning of June. Just the first signs now that the consolidation is about to end in a good way. We've got the 50-day line rising. We've had a bear trap rebound from below that 50-day line and good candles over the second half of the week. Initial target here, obviously the 200-day line rising at 14.7, that's a plus that it is rising, and then maybe up to as high as 17.5 pence by the end of this month, while we remain above the 50-day line at 12 pence. Signs of recovery at Bushveld. It may be a bit early, but we're going for it anyway. Here we've got bullish divergence with the lower lows for the end of August, but higher RSI trace, so that suggests we're in a falling wedge break. Initial target to break here around 2.4 pence. If we can break through that, then one would expect the shares to revisit July resistance at 3.8 pence, perhaps as soon as the end of this month. If you're cautious, maybe wait for the RSI to get through 50 before assuming that the turnaround is on its way, and we want to see as many end-of-day closes back above the initial August support at 2.05 pence before assuming that the turnaround is actually on track. Moving on to Canadian overseas, where it is a pleasure and a rare honour to be able to draw a rising trend channel there, one that's in place since the end of June. Shares look like they've just bounced off that. We want to break the 4.1 pence level because that's a recent resistance line, late August resistance line, but above 4.1 looking for up to 6 pence, and that can happen as soon as the end of this month. 50-day line's been rising well, and we've had generally higher highs and lows since the low back at the end of July, which started, the rally was started with an unfilled gap to the upside, which is something which you see in the strongest of situations. Hopefully this might be one of them. On to Bluejay, and here, apart from not being in alphabetical order, we've got the potential of a broadening triangle base. Good candles over the last 3 days in some ways. From a very oversold level, we bounced and want to see an end-of-day close back above the floor of the gap, last month's gap at 1.05. If we can get that on a weekly close basis, then we could be heading to 1.5 pence as soon as the end of this month. Ideally, we stay above 1 pence at least ahead of a move higher on that situation. Stock which I haven't looked up for ages is Eneraqua, and here it's interesting that after all the losses that we've seen in recent months, shares gapped down yesterday and they've soared today after that hammer candle off the lows. Looks like the lows in place because we've got bullish divergence on the latest rebound. The shares went lower yesterday, but the RSI higher, so that suggests that as little as an end-of-day close above 98 pence, and that May resistance line could take the shares up to £1.22 by the end of next month. The key here is to have an end-of-day close back above the top of that gap at 92.5. If we can do that, then that would be a decent trigger for a move to £1.22. On to Fire Angel, and here the turnaround looks as though it's starting. Rising trend channel base. We just need to break the 3.6, 3.7 pence area on an end of day close basis, and if you're fussy, maybe the 50-day line at 3.8 pence. Above that, then we could be looking at 5 3/4 by the end of this month. But nice sideways action there, and generally unfilled, sort of very strong candles on those moves higher that we've had. So it just looks as though the bulls are back in control. Good to see Gfinity on the front foot at the moment. We were sniffing that the shares may be turning around, and that sideways shuffle along a rising 50-day moving average that we've had in the last week or so, coming up with the goods, especially last week. And the view now is at above recent resistance at 0.09 pence. Neckline resistance, we should be heading towards 0.2 pence perhaps as soon as the end of this month, and obviously an end of day close back above August resistance at 0.11 on the first day of the new month would be very helpful, as is the bullish divergence line there from the beginning of July. So expect a move higher while we're above 0.09 on Gfinity. The stock which was also flagged here, which is pushed along, is GS Technologies. Here we had the break of the the break of that triangle there from the end of June. We've had bullish divergence going into it, so therefore we were anticipating even before the 0.8 pence break that the shares were going to break higher. They've done that, and looking for 1.3 pence as soon as the end of this month, while we remain above that broken line there from June at 0.85. Next one is IQAI, and anything with AI in the moment is obviously very popular. more so in the States than here. But anyway, rising trend channel there from the turn of the year. Top of the price channel there at 5.1 pence, and we're looking for that while we hold above the 3 pence area, which looks as though we can do after that latest RSI 50 rebound. Stock which is persistent in its rising nature at the moment is Plexus, and we've hit our second target again around 9.8, 9.9 pence. End of day close above 10 pence. As I've said before, should get the shares up to 14 pence, hopefully by the end of this month. That's the sort of major resistance area from the summer of 2021. PYC is next, and Physiomics, vertical move today, a wonderful move. In fact, started yesterday with the unfilled gap to the upside through the 50-day moving average, which is one of our classic patterns, as regular viewers will know. So that has worked, even though I suppose it's moved so quickly, difficult to catch. The view now is that an end of day close back above the gap there at 2.04 pence could take the shares on to as high as 2.8 pence over the next couple of weeks. And the way things are going over the next couple of days, ideally we want to see the shares remain above 1.6 pence, which is basically mid-range today for the stock. One of the more difficult calls of the recent past has been Pensana, but managed to identify it with that lopsided inverted head and shoulders neckline break there at 25 pence. Above 25 we were looking for 35, and it looks as though the shares will oblige, hopefully over the next week or so. But the key here is remaining above 25 pence for those who don't have as much faith as others perhaps. Finishing off with Wildcat, which is breaking its 50-day moving average for the first time since March. 50-day line there at 0.32, above 0.32. We're looking for as much as 0.7 pence by the end of next month, by the end of October. But obviously the key here is that we remain above that 0.32 level. We do have a bullish divergence line there as well, so there is sort of extra technical evidence for a potential turnaround. And look at those strong candles, and also look at that unfilled gap to the upside. So it's a bear trap gap reversal on this stock. So let's see if Wildcat does something which maybe people are not expecting. That's it from me today. More updates over the weekend.